Alrighty guys, welcome to the weekend video. It's Sunday afternoon, almost Sunday afternoon here in the west of Ireland, and it's actually snowing. It's been snowing all night, and we have a white Christmas at this stage. We never get snow here, never. It's usually rain, some form of rain, some derivative of rain. We're either after having a rain shower or just about to have a rain shower. That's our weather. And today we woke up to a blanket of snow everywhere. It's lovely. It's actually Christmas time now. Great. So let's just give a quick run over of where we stand right now and what to expect, with a bit of luck, what to expect for the week ahead. So I'll start with Eurodollar. This is the 4-hour chart, and we'll start to kind of unravel the mystery of what's happening here. So I'm still counting 5 waves down off the high. There's an alternate count that can view this as a correction down in wave 4. And the kind of the beef at the moment is this level here of the previous wave B, and that is at 117.09. We were looking for a break of that all week. We didn't get it. We got down to the 200 period moving average, and so far we've kind of taken a little bounce off that. So we still can't shrug the fact that this is 3 waves so far, and have to keep that in mind as we go forward, because unless this previous wave B here is broken at 117.09, I think it was, it's still, unless that is broken, then it's still a possibility that you can count this as a 1, 2, 1, 2, and then if that's the case, then we're likely to see a rally up into the 123 area in wave 5 of a larger structure. So we could see a 1, 2, 1, 2, 3, 4, 5, and 4 and 5 into a larger 5-wave structure labeled in blue here, which would not change the larger view at all whatsoever, the daily wave count. It wouldn't change that at all. It would just change this rise in wave C to a 5-wave rise rather than a 3-wave rise as is labeled right now, because I have it labeled the whole structure in wave B brackets here as a triple combination ABC A, ABC B, and then ABC C of B. So 3 waves, triple combination flat, I suppose you'd call it. If this turns out to be 5 waves, then we will go for a flat correction where wave C traces out 5 waves. So either way, it's a topping in wave B, in wave C of B, and the longer term outlook for Eurodollar is well down the road, and probably well below parity. But for the moment, we're kind of just caught in this this little conundrum here at the moment. So for next week, I'd like to see a break of this wave B here, 117.09, and that's kind of the main point of interest early in the week. If we can get a break of that level and a continuation of this structure to the downside, let's say we get 1, 2, 3, and 4, and 5 to create a larger 5 waves down, and then a 3-wave correction, then we stand to gain the most for the, and this is where I'll be eyeing anyway to trade, which is ironically enough in around the same level as it stands right now. So what we're looking for is a break of 117.09, a completion of 5 waves down and a 3-wave correction, and then a sweet spot for shorting the market into a long-term downtrend. Okay, so that's Eurodollar. Let's move on to pound dollar, which is very, very similar in setup at the moment. I'm going to go 4 hours in daily charts today because I want to orientate more than kind of I'll leave the intricate stuff for the daily for the daily counts on the daily updates, or sorry, the nightly updates. But I want to kind of concentrate on the larger structures at play at the moment. So here is pound dollar 4 hour. And here we stand at more or less the same juncture as euro dollar. So at the moment, I'm counting wave 4. Let's go. Wave 4 here, wave 4 blue in brackets as complete. And it is very likely that we have a wave 1 and 2 complete off that wave 4 high. So let's go down into 4 hour chart and look at this area here, see what I'm talking about. So there's a pretty nice 5-wave structure to the downside here, and I've labeled it wave 1 green. And then since that low in October, we've had this very long, drawn out, choppy, overlapping, schizophrenic type of market action. And it doesn't lend itself to an impulse move, and it doesn't lend itself, to a 5-wave structure. It lends itself to a 3-wave structure, and that's the way I've labeled it right now. You can pretty much call it probably a triple combination at this stage, much like euro dollar. It's just been, flat to up. So if you look at the price right now, 133, we haven't moved up or down. We're flat since the 2nd of October, and now it's the 10th of December. So, 9 or 10 weeks now at this stage, we haven't moved. All we've done is kind of corrected sideways. So that kind of does, again, speak to the fact that this is probably correctly viewed as a corrective structure. Now, on top of that, there is an alternate count, which would see a higher, which would allow for a higher wave C to complete. And this alternate count goes like this. The rise of the August low could be seen as a wave A, and this contracting structure here can be seen as a 5-wave contracting triangle. It would be, forgive me, it would be labeled like this: A, B, C, D, and E. So that's 5 waves internally, and all, we could count them in three-wave breakdowns. So that would be a wave B complete, and now we're probably working on a wave C of 4. So, sorry, C of 4, which tells you, which speaks kind of again to the just the horrible kind of corrective nature of the price action. A multiple of wave C's within a corrective wave 4. Right. So how would that alternate count work out? Much like euro dollar, we'd see another run up into about the 139, 140 area, where this larger trend channel kind of points to. So the kind of sticking point right now is this previous wave C high of, let us see, it's 135.49 or thereabouts, the recent high. So 135.50. Off that high, I've been counting 5 waves. I know it's kind of convoluted, 5-wave structure to the downside. Again, on Friday, we got an impulse move down, a nice sharp move down. And this whole count kind of hinges on the recent low here of 133.14. We get another break of that 133.14, and we get a larger move down below the 200 period moving average. Then we may be talking about seeing the kind of formation of a tradable high. And much like euro dollar, that's kind of what my trading focus is focused on, or my trading kind of sense is focused on. I want to get a clear 5-wave pattern and a 3-wave retracement. And again, that'll give us a tradable high here into a suspected long-term downtrend. And I like to wait for long-term moves. I'm a kind of a slow trader. I've learned my lessons, in my early days. I've learned my lessons. Dipping in and out of the market just doesn't suit me. I work and I analyze and I look for long-term tradable highs and tradable lows, and that's where I go. That doesn't suit everybody. That's just the way I work. So for next week, again, much like euro dollar, I want to see a continuation of the slant to the downside, a break of some significant previous lows, and a movement towards a larger bearish Elliott wave signal off the highs. And that's the outlook for pound dollar. Let's move on to dollar yen. And dollar yen has been kind of more forgiving and more cooperative of late. What we've been counting is this large wave 1, expanded flat wave 2 to complete, and a movement into a larger wave 3 up. And we could be counting this at a higher degree as well, but for the moment I'm sticking with what I have. So I've counted a 5-wave and 3-wave decline here, followed by a 5-wave and 3-wave decline there earlier on, probably Wednesday. I think we were talking about a 3-wave decline, which had finished at trend channel resistance, and we were expecting a nice push upwards, and we got that. So I'm pretty much full on bullish mode here for dollar yen, and the confirmation for the next run up in wave 3 won't come until we hit the major resistance there at 114.72, and that's what I'll be keeping an eye out for this week. So dollar yen moving back into the uptrend, which to a large extent, or to the largest extent possible, dollar yen tends to kind of dance to its own tune. You might see a lot more correlation between euro dollar and pound dollar, and there would not be, for a good 50% of the time, you wouldn't see a negative correlation, like a clear -1 correlation to dollar yen. So that's saying euro dollar might be in a clear uptrend, and then you would expect dollar yen to be in a clear downtrend. That doesn't happen, and for the most part, dollar yen tends to kind of move to its own tune. I don't know why that is. Maybe it's the Japanese culture is so disconnected from classic Western cultures here. In Europe and America, they have their own tune. That's what they do, and there's there's different drivers going on within those countries. So that kind of tends to kind of see a freer moving dollar yen, or I say a less correlated dollar yen. So for next week, for the coming weeks, I'm expecting dollar yen, a serious dollar yen rally, and we might get a nice entry point here I reckon next week, actually, if the current short-term pattern works out. You guys who are subscribed know, if the current short-term pattern works out, we might get a nice tradable low here into a nice expected bullish run up to probably the 120 area. So that's dollar yen. Let's move on to stocks. All right. We've had bearish momentum signals in the last week. We've had what I can see as a pretty decent 5-wave pattern off the high 1, 2, 3 triangle wave 4 and a wave 5 down to complete wave 1. I think we have 3 waves complete. Next week we want to see these highs of Friday hold and a retest of the previous low here at 24,000, a break below 24,000 in a kind of depending on how it counts, we might see a break below and a rally to another lower high. At that point, we might get an interesting very interesting and possibly very lucrative entry point. These are the long-term points or long-term opportunities that I kind of aim for in general, and a few of them seem to be kind of coming my way at the moment, all at once. So let's get out to the 4 hour again. What I'm reading here is a completed 5-wave pattern in wave 5 green in brackets there. So that's 1, 2, 3, 4, and 5. The previous downtrend was proved to be an expanded flat, and then we've seen this further rally up into the upper trend line again, and a breakdown again over the last week. And it's been an impulsive breakdown so far. So we'll see how this plays out. I mean, if we could feasibly see, this impulse move trace out 3 waves in a zigzag down, and then we'd probably move again to see kind of another expansion of this larger pattern to the upside. So again, we're kind of at a pivotal moment in stocks. Everything in my bones tells me that we're at the high. All that really needs to turn is the price itself. Everything else, the stage is set for monumental decline, which again nobody expects. Hey, who would ever seen that coming? Who would have ever seen that the larger populace didn't see it coming? That's kind of the most predictable story the world has ever told in markets, really, isn't it? People don't see it coming, and my God, do they not see this coming? All I have to do is look around outside, and the way people are acting here, it's like as if nothing happened over the last 10 years. And believe me, we went through the ringer here. It was a complete shit show here. The government's finances fell apart. The banking system fell apart. A couple of banks closed down. People lost everything. And now we're back at it like nothing ever happened. I swear, if you walked around and you saw the way people are acting this Christmas, you'd swear that, honestly, that nothing over the last 10 years actually happened. It was all just a bad dream. And like I wrote on Friday, we are actually walking like pigs to the slaughter here, lambs to the slaughter. And I don't like the look of it. So if this, let's walk past my prognostications there. If this 5 waves down, 3 waves up holds up, then we have got the high in, and we shall not see that high for another 20 years. But let's see how this works out next week. If we get another impulse move to the downside, then we'll start getting confirmation by breaks of previous lows. The first real kind of indication that we are in fact topping here is a break of this previous 4th wave. That's the real first major support. You could probably mark that as key support there at 23,251, and an impulsive break of that to a lower high will be a major sign. That'll probably take into the new year now at this stage. So we'll keep working towards that on stocks, and we'll see how it works out. All right, let's move on to gold. I've kind of documented my thoughts on gold over the week, on where the alternate count stands and where the current operating count stands. Both of them incredibly bullish. The alternate count views the large move up off the wave 2 low here back in last December as one full 5-wave structure to the upside, and this decline, this kind of continuous churn to the downside as a larger wave 2. So the alternate count would have a target at about 1200. The current operating count has met targets, and we've already hit in very oversold levels on say the 4-hour chart. On the daily chart, I suppose there's a little bit more left to give on that. So for next week, I want to see it will probably decide next week. Will decide which is our favorite count here at the moment, and it might flip. It might flip to the alternate count, and if it does, so be it. You just work with the lower high, because at that point we already have such negative, let's say, mood in the media and in general in society towards precious metals here, that it's built the perfect tradable low. This negative sentiment towards gold has built the perfect tradable environment, let's say, bullish environment. So either way, whether it works out to be the current wave count or the alternate wave count, both are signaling a very large run up in gold coming our way, and all you have to do is remain vigilant and remain patient, and the moment will come, and it's coming soon. All right, let's move on to crude oil. So this week we traced out we followed this fourth wave pretty perfectly, and we got a nice spike this week in a possible wave 1 of 5. So what I'm looking at for next week is a complete wave 1, 2, with again a tradable low in wave 2 coming our way, and there should be the minimum target or the initial target, let's say, for wave 5 is where wave 1 blue reaches equality with wave 5 blue. So that puts us at $63. There's a larger target then on the daily chart, up around the $70 mark, and that is where wave A and wave C reach equality. So over the next couple of weeks into the end of the year, I'm expecting a nice run up in excuse me, a nice run up in crude to complete a larger correction. In the meantime, we're working on the assumptions that we have a pretty significant low in place last week, and we are looking towards an Elliott wave signal to the upside again. So that completes crude. The short-term outlook is for a rally in wave 5 of C of 4. And at that point, again, we'll see a nice large turnaround, which should bring crude back into the $20 range again, which again should offer a nice tradable high. So that's the outlook that's kind of a medium to long-term outlook for 6 markets that we're following. And I hope you enjoy the rest of the week, or the weekend, sorry, and we shall see you back on the site tomorrow night for another day. Okay, have a good one. Godspeed.